Great. Thank you, Michael. This is Bill Hartman. It's a pleasure to be with you all today. It's a privilege to assist in whatever way we can. In this particular instance, it's to talk more about the CARES Act more broadly. I serve as Vice President at Everence for congregational and organizational services, and that means that I lead our efforts to give resourcing to churches, congregations, denominations, networks, as well as nonprofit organizations, and some for-profit companies where we do some retirement plans and things like that, but basically churches and nonprofits, and that's an important part of our work. I've been with the organization a little bit over 20 years, having worked in our foundation and our trust company, and have really appreciated the opportunity to be at Everence. My associate on the call today is Matt Gehman. And Matt, why don't you go ahead and introduce yourself to the group?
Sure. Good afternoon with each of you. My name is Matt Gehman. I'm the Chief Lending Officer for Everence. So I oversee the lending activity that Everence does. Primarily that includes both consumer, personal lending, real estate lending, and commercial lending, as well as church lending. I've been with Everence since the end of 2015, so coming up on 5 years, and just happy to be part of the group today, and looking forward to sharing with you Everence's perspective as it relates to the CARES Act, and on my behalf more specifically related to some of the lending activities that is coming out of the CARES Act.
Okay, I'm going to go ahead and do a screen share. We have a PowerPoint that we'll use, and so I'll start the screen share here. And so the CARES Act is approaching its third week of existence. Believe it or not, it was just approved and signed into law 2 weeks ago, this coming Friday. And it's been a whirlwind, as you may very well realize. It's been a whirlwind of activity to begin to get our minds and thoughts around what this really means and what it is. It's been alternatively called the $2.2 million stimulus bill, and a variety of other descriptions, but excuse me, the $2.2 trillion stimulus bill. What's a few million or trillion when you're talking about those kind of numbers, right? It has, as you're probably aware, sweeping programs in it, and so we thought it would be helpful to talk with you about a number of those programs that impact your church or may impact an organization that you're working with as well. So just a couple of highlights. The first is that it does include what are called individual tax rebates, and these are the what I'll call the direct cash stimulus monies that are available for or payable to individuals that have that are on record as taxpayers or eligibility to pay tax, and basically they are $1,200 per person, or $2,400 for a couple, and then $500 additionally for each child. The rebate funds actually decline after $75,000 of household income, and work their way down based on total income until they zero out somewhere in excess of $150,000 of joint income. We'll just continue to move through this. If you, as Michael indicated, if you have a question or you have a comment or an input, feel free to use the chat function, and then at the end we'll have an open time for more wide-ranging conversation if you'd like to have that. The payroll protection loan program is probably the most talked about of all of the aspects of the plan, and I'm going to turn it to Matt to describe that and give some of the details related to it. Matt?
Yeah, Yeah, so I would just say the first thing probably to know about the Paycheck Protection Loan Program is it's very new. It only began being offered on April the 3rd. So there was a lot of scrambling on behalf of the SBA, who's administering the program, to get the direction out to the lenders in order to be able to generate loans under the program. So it was a very difficult start, I would say. The program is very new, and there continues to be more information each day as far as clarification on certain cases, certain questions. So it is an evolving program. But overall, generally speaking, so this comes out of the CARES Act. There's $349 billion that are allocated to the Paycheck Protection Loan. And it is eligible pretty broadly in the business and nonprofit community, and churches are eligible as well. There is an employee limit. It is intended more for small businesses and nonprofits that have fewer than 500 employees. And as I mentioned before, the SBA, Small Business Administration, is kind of the conduit for which these funds come through. The purpose of the Paycheck Protection Loans is employee retention, and there are certain expenses that there are only certain expenses that are eligible under the loan program. The main ones are qualified payroll, rent, utilities, and interest and debt obligations. In terms of the loan amount, the loans are for up to 2.5 months of payroll. So essentially it looks at your payroll from the preceding months, and it takes that 1 month and multiplies it by 2.5. And that's the amount that you're eligible for, no more than that, regardless of what other costs you may have. The thing that probably makes this loan the most attractive and why it's gotten so much attention is it is forgivable. Up to 100% of the loan is forgivable, but only if funds are used for certain approved expenses. And you need to use at least 75% of the loan directly towards payroll, and you have to provide proof of that. So that's really important to know. And then an additional up to 25% can be used on other approved expenses, such as rent, utilities that I mentioned earlier, or mortgage payments. In terms of the actual terms of the loan, and in the event it's not forgiven, the terms are still attractive. The loan term is 24 months. The interest rate is fixed at 1% across the board, regardless of what lender it's through. And there are no payments required for the first 6 months. There's also no security known, or no security required, or what's known as collateral in the lending world. So there's no security that's required, such as real estate or anything else. And there's also no personal liability. So in the case of churches, pastoral leadership, other leadership within the church would not be personally liable. Thought it might be helpful to just outline a few steps that we recommend for nonprofits and churches. The first thing is to find the right lender. Not all lenders are able to offer this program. Only SBA qualified lenders are able to offer the program. And there is on SBA's website a locator specific to the PPP program, where you can find lenders in your area. I believe you enter in a zip code. For the most part, SBA lenders are going to be banks and or credit unions. And for the most part, what we're seeing in the marketplace is that they're restricting the PPP loans to existing customers. And there's some good reasons for that as far as compliance that I won't bore you with. But generally speaking, most lenders are requiring you to have some type of existing relationship with them in order to apply for the PPP loan program through them. You cannot apply directly with SBA. You do have to go through an actual SBA lender, so a bank or a credit union in most cases. So one of the things that's really important to know is that if you have existing relationships with financial institutions, so whether it be a local bank or credit union, it's really important to talk to them first is what we recommend, because they're probably going to be in the best position to help. So leveraging the existing relationships you have in the financial services community is really important. Second thing to know is the program has experienced just astronomical demand. So SBA last year did approximately 60,000 loans in all of 2019. Since April 3rd, they've processed, as of yesterday, approved over 790,000 loans in this program. So that just gives you a little bit of insight into how much demand there is. So as you can imagine, both lenders and SBA are very overwhelmed. So things are not moving quickly through the pipeline. If you Google the PPP program, you'll see lots of different articles about different cases of people who are frustrated because they don't quite know where their loan application stands or haven't heard from their lender. There's been a lot of technical challenges and then just a lot of challenges in being able to meet the demand, because it has really surpassed, I think, what anyone could have imagined. So one piece of advice is just be patient with lenders. I can tell you from some firsthand experience, lenders are working as hard as they can around the clock in most cases to try to get things through. But we can only move so fast because we are relying on SBA and some other third parties a lot of times in order to get things through. So encourage you to be patient. And it's certainly not unusual to be experiencing some lag time in terms of communication because of how overwhelmed kind of the system is right now. A little bit about Everence and our role in this. So prior to the CARES Act, so prior to the end of March, we were actually not an SBA approved lender. However, through this process, you are eligible to become an SBA lender. So that's the path Everence has taken. It is a process that takes some time. And recently we did receive approval with the SBA, and currently we're working with the SBA to actually implement the program. I would say in terms of timing, as far as Everence, we're expecting the program to be ready this week. It may be even as early as tomorrow. I've been kind of working around the clock to try to get that out as quickly as we can. But we are making good progress there. The direction we've given people is not to wait for Everence, because the funds are limited. The $349 billion is going fast. So if you have existing relationships, certainly leverage those and utilize those. You won't hurt our feelings. However, if you haven't had success or have not been able to access the program, and once we're live and ready, you're more than welcome to apply. So how Everence is positioned on it is we will make it available to any Everence client. So churches would be included in this. MCUSA churches would be included in that. The application process on Everence will be entirely online. We're working hard to make the process as smooth as possible, but it is a new process for us, so we are learning a little bit too. I just encourage you, leverage your existing relationships, but if Everence can be helpful, if you don't have the other options, we're happy to try and help as well. In terms of one piece of advice, I know I've gotten some questions from churches or businesses that have started an application with another lender. And like many, they're experiencing a lack of response. I encourage you, if you're in that boat, to what I would call stay in line. What you probably don't want to do is jump lines, because ultimately the way these loans get processed is it's all through one channel and it's all through SBA. So rather than jump lines and have to start over, I would recommend you stay in line and just stay patient if you have started an application with another lender. But as I mentioned, if you haven't started one and you need a lender, we'd be happy to help. But again, I think a lot of it is there's a lot of stress around this program because funds are going fast. In terms of the actual funding, there's been very little actual funding so far. And that's because the direction from SBA has been kind of limited for lenders. So a lot of lenders may even have communicated approvals, but haven't had the ability to fund yet. So just stay patient. One thing to keep in mind is after a lender approves you through SBA, you should receive some contact from them that you've been approved. And then lenders are obligated to fund those loans within 10 days. So it is a matter of time, so be patient, but it is an ongoing process. A couple other just general bits of advice to help make the process as smooth as possible is do talk with board leaders within your church, other church leaders. You want to try to make sure you have as much information up front as you can. And honestly, it's going to vary a little bit what lenders ask for. It's not going to be uniform across the board. There's going to be some commonalities, but lender requirements do vary some. So I can't give you exact things that are going to apply 100% of the time. But generally speaking, having things like bylaws available, meeting minutes, if there's minutes that where you approve certain people to sign loan documents, for example, on behalf, those are really important to have. So if you kind of think back to when you tried to either get a loan, if you've had that experience, or a bank account, remember some of the documents that you would have provided them and have those available. Those will help expedite your application. We know that there has been some churches that have raised theological concerns. Everence's position is we don't take a position on that as far as whether or not an organization or a church should apply. We know that churches are eligible for this program, and they are eligible even if they have not officially filed and received their 501c3. We do know that. However, in terms of the theological concern, whether or not it's right for your congregation, that's ultimately up to you. So we're not gonna guide you in either direction there. A few final comments yet on this, and hopefully I'm not taking up too much time. I think this has been a hot topic, so hopefully this is helpful. Generally speaking, again, the $349 billion, it sounds like a lot of money, but the funds are going very, very fast. The program is scheduled to end June 30th, and there's an expectation that the funds are going to run out well before June 30th. So I would not use June 30th as your marker. There is a chance that additional funds may become available. You've probably seen some headlines around an additional $250 billion. Nothing's been approved yet, so we don't know that for sure yet, but there is talk of that. So it's possible there will be additional funds that come in through this program. Record keeping is really important. Obviously, we're going to be asking for some payroll information on the front end of things in order to validate the loan amount. So it's important to have good record keeping prior to applying for the loan, but it's also really important to keep good record keeping after the loan, because ultimately what's going to happen is, most people are going to want this loan forgiven, but SBA is going to require documentation from each borrower that is sufficient to them, that states that the usage of the funds have been appropriate. So again, at least 75% going towards payroll costs, and then up to 25% for other reasons. So please keep really good, diligent records. Know too that the forgiveness aspect of it is not a lender by lender decision. That is an SBA decision. So like any government program, I can tell you from experience, the requirements tend to be pretty rigid. This is a fairly relaxed program from what I've seen, but there's also not a ton of guidance yet. So there's some of my concerns is what might come down the pike in terms of requirements that we just don't know yet because this is so new. So keep really, really good records. That's really important. I think that concludes my comments on the Paycheck protection loans. Bill, I don't know. I saw there's a couple questions come in. I don't know if we want to handle those at the end or if we want to handle some of those now.
Well, why don't we, if there is one question here concerning the payroll protection program. So why don't we take those? There are also, you said there are a number of them, and some of the rest aren't questions as much as they are greetings, as well as requests to keep your mics muted if you aren't talking. So the first question is one of the qualifications for the payroll protection program for a church to demonstrate that there's been a loss of income through offerings?
So the payroll protection program, there's a statement on the borrower application that basically states something along the lines, I'm not going to have the exact language here because I don't have that in front of me, but it states something along the lines that basically the reason that you're applying for this is because you've been negatively impacted by COVID-19. There is no documentation requirements around actually evidencing how you've been impacted. So in terms of in a church's case, in terms of lost tithes, there's no burden of proof there on the church. So effectively, it's the honor system just attesting that you have been negatively impacted, but there is no requirement to state how much you've been impacted. And then I see a couple other questions. There's a question.
Go ahead.
Yeah, I was just going to say there's a question about closing costs. Someone asks, is there closing costs for the PPP loan? There are no closing costs. In fact, SBA actually prohibits a lender from charging closing costs. So there is no cost. The only cost is the interest, which is 1%. One thing I didn't clarify is during the 6-month period where no payments are required, interest does accrue. So know that even though the payments there is no mandatory minimum payment, interest does accrue, but there are no closing costs for the PPP loan. Then the next question says that there's been some contradicting messages regarding whether pastor's housing allowance can be included in the amount of payroll that is submitted. It seems that some lenders include that and some don't. Can you comment on that? I was afraid someone might ask that one. I don't have a good answer on that one. I have asked that question specifically to our regional SBA office here in Pennsylvania and have not received an answer. I know that SBA is flooded with questions and they do have responded to many of them, but they tend to only respond to the more common questions. And I'm assuming that hasn't been a commonly enough asked questions to get a response. So I unfortunately don't have guidance on that.
But Matt, maybe I could, if I could comment. Yeah, as Matt indicated, it seems like pastoral housing allowance is one that different lenders are approaching differently, which doesn't seem appropriate. It isn't appropriate. It needs to be consistently across the board. And I've done some web research myself and haven't found anything conclusive from either the SBA or the IRS, who might also have a position on that. I think it's just too soon to tell. I did have an opportunity to watch a video from a Christian resource that had an interview with one of the bill's authors. That doesn't make it dispository, doesn't make it provable that the SBA would approve it, but his comment was, it was Senator Marco Rubio from Florida, and his comment was that we intended it to cover wages and benefits, and it seems like pastoral housing allowance would be a benefit, so we would think it should cover it. But there hasn't been either direct, as Matt said, the ultimate direction should be coming from the SBA, but it isn't clear. Matt, for lack of a better piece of advice, I would suggest if you're submitting an application, include it, and someone would have to rule it out in terms of being an eligible purpose. Would that be good advice or not?
I would say be careful. One of the reasons that you're probably seeing different lenders do different things is, unlike most government lending programs, the burden of proof and validation is actually on the borrower and not the lender. So the guidance from SBA to the lenders has been, and this has been a commonly asked question, as far as how much we have to, as a lender, validate your payroll. And the response from SBA has basically said that's the borrower's responsibility. You need to look it over, make sure that you don't see something that's totally out of line, but that they're not expecting a lender to go through in great detail to determine what's eligible and what's not. So I think that's probably why you're seeing different lenders do different things, because most likely they're not going into that much detail to validate it because they don't have to. I would say, maybe I'm being overly cautious, I would probably advise against using it, because you probably, if you're planning for the loan to be forgiven, you probably don't want to risk it. I do kind of tend to agree with Bill. I think you'd probably be okay, but I tend to maybe, especially with a forgivable loan program, I would personally tend to err on the more conservative side. But yeah, unfortunately, that's about the only guidance I think we can give right now. Certainly, if we get any more guidance on that, we'll pass it along.
There is a experiential note here. First Mennonite Church in Iowa City has been approved, and they're the responder there is saying that they did include the housing allowance in the total payroll calculation. So, yeah. Matt, a question for you that I had here as well. Where should people reach out to Everence Credit Union? Who should they be in touch with, or where on our website should they be in touch in order to begin the process or get more information?
Yep, so there will be a web page that will be going up. I'm expecting it to go up at some point tomorrow at the latest, but we know it'll be going up this week. But there will be a specific website dedicated to PPP. And on that website, there will be two links. The one link will be to a PPP loan application, and then there will also be a link to credit union membership. If you're an existing credit union member, you can go directly to the PPP loan application link. If you are not, you're going to want to go to both links because you do need to become a credit union member in order to qualify for a PPP loan. It's a requirement that Everence as a credit union has to adhere to. So there will be links going up. They're not there yet. You won't find them there yet, but there will be links going up on that PPP page. And that's really the best way to get in the queue. I'd recommend completing it. It's not a hard application. There is a lot of guidance out there from SBA on it, but it's not a real difficult application to complete. So I'd recommend doing that as quickly as possible so that you can get in the queue. Because while we don't know how many we'll get, we are anticipating quite a bit of demand. So.
Okay. Certainly opportunity here if folks want to extend more questions on the chat feature. That's great. Matt indicated that he had taken a fair amount of time, and that's because this is the PPP is an important program. It's probably the most visible thing within the CARES Act. So we've talked about recovery rebates and also about the payroll or the Paycheck Protection Program. I need to, there we go. Okay. Some other pieces of the program include some changes related to the charitable giving area. Currently, there are limits, or previously, under current law, I'll put it that way, there was a limit of 60% of adjusted gross income that could be deducted for charitable contribution purposes. And that limit of 60% of adjusted gross income has been changed to 100% of the adjusted gross income, and saying that excludes gifts to donor advised funds and private foundations, but basically making it more tax attractive for individuals that can deduct contributions to make contributions during the year of 2020. Another aspect is that there's a $300 charitable deduction for all taxpayers for charitable purposes. That's non-itemizers. Itemizers, anyone can deduct the $300 for any charitable gifts that they've made, with the exception of a gift from a donor advised fund, actually to a donor advised fund. I think that is actually deductible, but anytime a gift is made from a donor advised fund, it's not deductible. Another charitable giving related provision actually allows that folks who make contributions directly from their IRAs, 403B plans, or 401k plans, those are defined contribution plans. There is a waiver of the distribution requirements for what's called the required minimum distributions. So it means that those withdrawals aren't required. However, if a person does make a distribution during the year, they can still do what's called a qualified charitable distribution directly from their retirement plan to their church or to their charity, and it would avoid taxes on that particular gift. We do have I just pause here for a minute. We do have another question about loan forgiveness. So we'll come back to that here in just a minute. We wrap up the section on charitable giving aspects of the CARES Act. Probably doesn't apply to folks on the call here, but you may have individuals in your congregations that have corporate giving. They do from a company, and cash gifts and food inventory gifts. Actually, the amount of the deductible contribution is increased up to 25% from a previous limit of 10%. We'll come back to that question. Matt, did you see the one there concerning the loan forgiveness? Do you want to speak to that?
Let me just unmute myself there. I did. So the question was, will you talk a little bit more about loan forgiveness? Is that set up at the time of loan approval, or would churches learn later on in the life of the loan what percentage is forgivable? So up to 100% of the loan is forgivable, but you have to use at least 75% of the loan proceeds directly on payroll in order to qualify for that 100%. So it is 100%. That is forgivable. In terms of the forgiveness itself, it does happen later on in the loan cycle. It's not right away when you receive the loan, because you obviously have to prove that you used 75% of those funds of the 2.5 times payroll towards payroll. So it's going to be at least 2 months until after you receive the loan that you could apply for loan forgiveness. You do have to apply for loan forgiveness in writing to the lender. That does not happen automatically. So you have to apply in writing and provide sufficient documentation of the usage of it. And then at that point, your lender would submit the forgiveness application to SBA, who ultimately decides whether or not the loan is forgiven. The lender has 60 days to respond to your forgiveness application, which again has to be in writing. I see there's another question as far as is the QCD still limited to $100,000? I believe that's related to the employee compensation. There is in terms of the calculation for the 2.5 times payroll, your employees are limited to a maximum of $100,000 in terms of compensation. So if you have employees that are over that, you do need to effectively gross that down to the $100,000 for the calculation. I would encourage you use the SBA website for more information in terms of how to calculate the actual payroll amount. That's really important. It continues to evolve. That's why we're telling people to keep an eye on their website. They have a lot of good direction out there.
Thank you, Matt. I'll just comment on your last response there. I think the question that Tom was asking there is the qualified charitable distribution. It was good information you gave, Matt, that there are some limits related to the amount of compensation for the PPP program. QCD is a qualified charitable distribution from an IRA or a retirement plan, and that limit continues to be at $100,000. So just to confirm that that's the case. There are some other provisions in the program and in the CARES Act. We won't go into detail on them. One of them that you may be aware of is the expansion and extension of unemployment compensation and unemployment assistance. So that is a needed thing for many persons in our communities and church families who have lost jobs. And then there's also a payroll tax assistance program that is available for larger employers, and also if an employer has gotten a PPP loan that has been forgiven, they're not eligible for that particular program. So we won't go into the details on those other than to say that those are a couple of the other aspects of the program in addition to the main ones, which are the PPP program and also the recovery rebates, the cash payments. This is a good list of trusted resources at Everence when we are putting together our web information and other locations. We're often leaning on these resources for confirmation, so that's some of the other places that you can gather information about different aspects of the CARES program. Particularly mentioned in the Everence resource, we do have a web page specifically devoted to the CARES Act as a resource. So once you log on to that COVID-19 support, you have a choice of a number of different locations that you can go to gather information on different topics, including one about the CARES Act specifically. One of the things that we did want to mention is that yesterday, Everence, Mennonite Central Committee, and Mennonite Disaster Service opened a congregational relief fund program, which churches can apply to for grant amounts up to $5,000. And that is being funded. The initial funding has come from the 3 organizations, and there's an application, a press release, background information, and frequently asked questions on the Everence website as well. So invite you to take a look at that and/or be in conversation with your Everence stewardship consultant. And Michael has also invited me to join the conference ministers gathering on Thursday of this week, and we'll talk some more about that program as well. So we are grateful to be able to assist churches in this time, and these are monies that are available, different from Everence's sharing funds, which many of you are aware of, but encourage you to take a look at the Everence website for more information about that. Are there any other questions or things that folks would like to talk about? You can feel free to talk live voice or continue to use the chat feature.
If you do have a question, you can unmute and just ask your question, or continue to write in the chat feature.
I just see one question came in on the PPP. We want to ensure that our staff are paid whether they work or not, janitorial, childcare, etc. Is that possible to be reimbursed for work not done? Trying to figure out some of the intent of that question.
I cannot see the question.
Yeah, it looks like it just came. Looks like it did come to me privately, maybe. So I think if I'm interpreting the question correctly, it's whether or not you can continue to pay employees if they work or not. In terms of the Paycheck protection loans, they're specifically designed around retaining employees, so meaning that you would keep them on staff. And there are some requirements to keep people on staff as part of that. That is part of the testing for the forgiveness. So if you would have other church employees like janitorial that wouldn't be needed because the church isn't meeting and they're not working, you would, under this program, be expected to continue to pay them to keep them on staff. And effectively, you're utilizing this paycheck protection loan in order to do that. So it really can be utilized for both people that would be continuing to do work, and then also for employees that would not be able to work due to some of the COVID-19 requirements. So the key is making sure that you keep them on staff and continue to pay them, not so much what work is being done. Then there's another question. Do you pay interest until the loan is forgiven? What is the loan rate? So the loan rate is 1%. It's a fixed rate for the 2-year loan term. The interest accrues during the 6 months, the first 6 months when no payments are necessary. Interest does accrue. And you would pay interest until the loan is forgiven. So after the 6 months of non-payments, at that point, the loan needs to start being repaid. In most cases, the expectation is that the loans will be forgiven prior to that. I think that's one of the reasons they designed it for 6 months. But in the event the loan is still around in 6 months, it would need to begin being repaid based on the requirements in the unique promissory note. So there would need to be payment until it's forgiven if it's outside of that first 6 months.
Okay, thank you, Matt. Michael, I guess we'll turn it back to you. Doesn't look like there are any more questions coming in on chat.
Yeah. Thank you, Bill, and thank you, Matt, for spending this time with us. You have some information up on the screen for other resources as well. We've recorded this, so once we get it done, we'll once we're done here, we'll send that to our web folks. It'll be on the web page, Mennonite Church USA's COVID-19 resource page, probably sometime later this week. So if there's questions, things in this conversation you want to circle back to, that's how you can get a hold of that. Otherwise, I would encourage you to call your Everence reps as well, and then follow the guidance that Matt and Bill gave you. I'd really appreciate your taking the time to talk to constituents and to the folks on the call. So thanks, Bill, and thanks, Matt, and thanks for the work you're doing on behalf of the church. And this will conclude our time if there's no other questions.
Thank you, Michael. We appreciate the opportunity. And as Michael said, feel free to be in touch with any of your Everence professionals. And if they're not the person to answer the question, we will get the answer. So thanks so much.
Yes, thank you.
Take care, everyone.
Thank you.